whether it's in the US or Europe, every single one of our customers or participants who are either broker dealers or making markets or creating ETFs or institutional asset managers have full-scale prioritized plans for tokenizing assets and collateral. And that's across the piece. And we're seeing that obviously here in Europe, whether it's in Germany or France or Sweden. It's no longer a conceptual thing. It's now how do we move into adoption?
Welcome to Inside Digital Assets, the podcast about the future of capital markets, tokenization, digital assets, and the technologies that power them. Welcome to a new episode of Inside Digital Assets. Today, I have to say a very, very special episode because I'm sitting here with Roland Chai from Nasdaq. Hi, Roland.
Hi, Lidia. Great to be here. Thanks for having me on board.
Roland, you are the president of the European Market Services at Nasdaq, and you're also the global head of the digital asset initiatives at Nasdaq. So obviously, knowing a bit also about the partnership we have, we are working very closely together. So what we want to do today is a bit getting to know you, but also getting to know what Nasdaq is doing with regards to digital assets. Let me start first, though, with looking a bit how you ended up in the role that you are at now. How did you get to this Nasdaq position? What did you do before?
Yeah, so I've been at Nasdaq 6 years. Been looking after European markets since late 23. And before that, I was responsible for all the commercial software business on market technology. And so that's trading, clearing, and risk management and CSD software that we supply to about 130 global marketplaces around the world, and before that was chief risk officer at Nasdaq. So I've been in the technology software development space for a very long time. Before that, at LCH and Hong Kong Exchange and ASX before that, and I think in my market technology days, we started and brought our first sort of tokenization platform to market, and developed what's now our Eclipse digital product. And the first thing was in 2024, we worked with the Chilean central bank and also DCV, which is the Chilean CSD, to tokenize Chilean government bonds. And so that platform was a native DLT platform that we built, and that platform works both with the CSD technology or by itself. And now that's grown quite a bit in LATAM. So I think there's 130 bond products now tokenized on that platform. And we brought that over, and also we've started doing carbon credits on that. So there's been a while sort of working through post-trade and also tokenization as the industry adopts it. And then I think really it accelerated in the last 12 months as the US market started becoming quite more involved, and we saw much more different approaches from the US regulator. So a number of tokenization and digital asset initiatives arose. So I think from a Nasdaq perspective, it was very much we see that tokenization has a huge impact on the post-trade space, collateral, balance sheet, securities. We don't necessarily see it's going to change the trading universe and how we trade. I think essentially the power of programmable distributed ledger assets and smart contracts lies in the end-to-end value chain and asset workflow and asset servicing. So I think from a Nasdaq point of view, sort of expertise in the post-trade and asset lifecycle is quite important to be able to develop the platform and bring that platform to bear. So it was in that context that I was given responsibility at the beginning of this year for our digital asset approach.
And in this regard, we announced recently a partnership that Nasdaq is connecting its trading venues to Seturion. You also have other initiatives in the US we talk about today, where you're partnering, for example, with Kraken. So let us deep dive a bit into those different initiatives and maybe start on the Seturion side. What made you decide of connecting Seturion and partnering up on our side?
Yeah, look, I think when we first had discussions with yourselves, I think we've had a good partnership in the past. It was very much we very much were excited about the platform that you had come to, the Saturn platform, also the open architecture, and also the philosophy behind it. I think from our perspective, there was a good fit with being able to take a small part of what we're doing and apply that to both Börse Stuttgart's markets, but also Nasdaq's markets in Europe, and being able to leverage the work that had been done already by yourselves on the platform, and really stand the product up and accelerate that, and really use the asset classes that we're both strong in, and also the liquidity that we have to stand up a product relatively easy. And also, I think the second part was I think we had a very strong alignment in philosophy, and the opportunity and the future of digital assets, and the importance of that to our ecosystems, not just in a disruptive manner, but the ability to deliver value for our customers, and also increase the opportunities for our institutional customers to develop, distribute, and manage more product efficiently. I think that was a key alignment. And then thirdly, it's the speed at which I think both of us are moving towards, and the priority that we both place in terms of adopting this technology, and also enhancing the benefits and delivering those benefits to our customers.
I totally agree, and also this aligned mindset that we have then results in the products on how we are building it. So what you were mentioning as well, having the trading, keeping as it is, doesn't need to go on the blockchain, but really focus on the post-trade infrastructure. And there, I think where we also share alignment is in terms of looking at the European capital markets, which are heavily fragmented today, and that is one of the main pain points that we as large exchange groups are actually suffering from. Can you elaborate a bit on how you think that such an open industry solution that we are looking to build is actually going to help solve this fragmentation across Europe?
Yeah, absolutely. And look, I think that's a very strong reason, is that if you're going to, if you look at European competitiveness, the cost of owning and custodying assets across multiple jurisdictions, issuing a product across multiple jurisdictions, the fragmentation that's there right now, and the silos that are there within the jurisdictions make it costly on a relative basis, quite expensive for offshore investors or European investors to invest in different EU markets, and it becomes a very time-consuming and expensive process. And what that means for the end investor, whether they're institutional or retail, is that European product becomes comparatively much more expensive to invest in because of the individual rules that are there. I think what digital does is give the opportunity to really cut through that, and lets us rethink how we create that framework in a resilient and safe manner within regulated markets, with regulated supervision and with the guardrails that we have. But really allows us to think about, let's not have the concept of domestic custody, but have digital custody within a EU framework. And I think that is a very powerful proposition. And as an example, we have three domestic markets: Denmark, Finland, and Sweden. We have a different CSD in each market, and for a structured product issuer to issue across all those three markets, even though the trading and the listing is harmonized, the issuance has to be done 3 times separately in relatively small markets. So the barriers to entry are quite high because of the individual nature of this in issuing into each market. I think that's where being able to look at digital and tokenization as a European platform and being able to issue once is incredibly powerful.
And you already mentioned it a bit. Then looking at the asset classes, me personally, I believe it's going to be a shift for all asset classes moving on tokenized rails. I think we share that opinion. However, we need to start somewhere, right? We cannot start with the entire industry at once. So we really purposely decided to focus as a first step on the asset class of structured products, where Börse Stuttgart Group, but also Nasdaq are very large players in that asset class. Why do you think that this specific asset class on your side is a very good asset class to start such a?
So going back to what I said before, I think the inefficiencies in terms of issuance in each market are very high. So therefore, what we found is with most of our structured product issuers is a willingness to take down the high cost of issuance and access to each domestic market. So you have high costs, inefficient processes, and so therefore, and a relatively ring-fenced environment, because normally structured products, derivative warrants and listed derivative products have one issuer and a number of market makers and a number of retail brokers or distribution points. So it's not like equities where you have all of a sudden maybe 20 participants in your stock. It's quite a ring-fenced ecosystem with high setup costs. So I think there's a lot of economies of scale to be gained to move on to digital. That's why it's a good asset class to start, because there's several low-hanging fruits and relatively quick realizable benefits for issuers and investors alike.
Now, looking at the US, where it is a bit of a different landscape, so also in terms of asset classes, can we talk a bit about the projects that you have there? So you announced a partnership with Kraken. Can you elaborate a bit on what you're planning in this partnership?
Yeah, so I think we announced two things, and they're related. One is Nasdaq issuer based token framework. So essentially, we are developing an equities token that will be launched next year, and essentially that will be an issuer approved token, and essentially the token will become fungible with the underlying security and will have the same QSIP, or in Europe it's ISIN that's used, same QSIP as the underlying, and will have the same rights as the underlying security. And as effectively, if you hold the token, you are holding the underlying security. So the two are interchangeable. Now, as part of that security and that token lives within a regulated framework. In the US, it's called Reg NMS. That's what the framework for regulated equities is. And so it will live within that framework. And investors can hold that through a wallet that's via broker-dealer, and that's all in a regulated market and traded on regulated exchanges. Now, the partnership with Kraken is really an important thing, is that as we move forward on the digital front, there are a lot of innovations on digital native markets, and from the world of crypto and that technology and those services have been working for a very long time in the digital native markets. And we fundamentally believe, and so does Kraken, is that over time we need to bring the infrastructure and the connectivity together rather than have different pools of fragmented liquidity sitting in parallel tracks, right? So I think for us, bringing the two worlds together and connecting it and bring a lot of the good stuff that we have in capital markets, in the US capital markets, we have the deepest liquidity, and we have very resilient and high integrity and transparent and markets with incredible price discovery. Being able to connect with Kraken, some of the permissionless world, and being able to transfer a token from one to the other means that customers can take advantage of that deep liquidity, the transparency, and the governance of the mainstream markets as well.
What is the main difference in terms of the US market and the European market, that in the US you can really start very easily on the equity side? or let's say easier?
Look, I think there's a number of tokenization models that are coming out. And I think with the SEC's approach under the new chair of the SEC, Paul Atkins, it is a very forward-looking approach. I think they've been on record to talk about rather than enforcement, which was the approach of the previous administration. They're very much looking to allow innovation exemptions and using no action letters, which they've done quite a number, including approving DTCC's tokenization letter as well as ours, our filings. They've been very progressive in allowing different market models to come up. So I think I think that journey, along with the Genius Act, which was passed, and at the moment the Clarity Act, which is going through the process, is very forward-looking. And in a way, I think prior to that 2 years ago, Europe, relatively compared to the US, was ahead with the MiCA and also the DLT pilot regime. And I think the US was quite envious of that. And now I think the US is exploring how to scale and set up those markets quickly. And it in a way, it is a lesson for Europe as well. Is about how do we move forwards from MiCA and the DLT pilot regime to allow scaled adoption and institutional adoption of that. And to a large extent, it's not just the listed markets. It's also OTC markets, collateral balance sheet, payments. So there's a widespread industry move across this from not just exchanges or market infrastructure, but and the digital markets, but also institutional markets, institutional asset owners, and also banks and financial institutions who want to unlock balance sheet and be able to use that, and also explore the incredible flexibility of programmable assets and develop products and services for their customers quicker and cheaper.
Now, obviously, other players are working on such infrastructures as well. So, for example, a New York Stock Exchange announced some new venues for stocks and ETFs on a tokenized form. Do you think we are running a bit a race and are running into the danger that everyone is building again new silos instead of having an interoperable infrastructure across the different jurisdictions?
Well, I think what's very important is that the principles upon which different smart contracts and tokens are created allow for fungibility. Fungibility and interoperability. So fungibility in respect to, for example, our token being exchangeable for the underlying security, and then interoperability in the fact that you can store the token in a wallet, in a custody place, move it into a place of custody like a CSD, and move it across networks. So I think that is incredibly important. I think the industry understand that. I think people don't want to create infrastructure for by chain. And so you don't want to have many different wallets. You want to have one wallet that can hold many different tokens that you can move on to multiple chains. So what I think the industry, I think everyone in the industry understands that. I think there's considerable efforts on DTCC, Euroclear and Clearstream to look at standardization. And also we're working with them about how to ensure that when we stand up our structured product token, that it's built alongside standards, not just with other parties, but ensure that those securities can be interchangeable and custodied in different places, but also on different networks. So, for example, that it's EVM compliant or Canton compliant or fixed compliant. So I think standards are extremely important. And if you look at the open open source nature of a blockchain and the history of blockchain, I think the most successful parts is where people have moved towards standardization.
Now, when we hear critics, and I usually don't share that critic, but what we often hear is that it takes a very long time until tokenization has its breakthrough. Me personally, I believe the technology is in existence since now roughly 10 years. So we are changing financial infrastructure, so that really takes some time. But nevertheless, feeling that there are now really increased partnerships also from large institutions coming out. Do you believe that we are a bit at some sort of a tipping point currently with respect to tokenized assets?
Yeah, look, I think to your point, that crypto and DLT has been around now for over 10 years. I think we all remember in the 2010s coming across DLT. A crypto was even before that. So I think that it has taken time through there. I think what has shifted is that whereas the last 5 years has probably been POC's experimentation, I think you're seeing widespread mass adoption and scaling, moving from POCs to implementation, and also as we are doing and taking one asset class and then really saying how can we scale this. And I think that's not just an isolated example, but that is across all of our customer base as financial asset institutional managers, asset managers, whether it's in the US or Europe. In the US, every single one of our customers or participants who are either broker dealers or making markets or creating ETFs or institutional asset managers have full scale prioritized plans for tokenizing assets and collateral. And that's across the piece. And we're seeing that obviously here in Europe, whether it's in Germany or France or Sweden. It's no longer a conceptual thing. It's now how do we move into adoption? And I think, as you said, there's always a fear of, okay, how do we adopt this technology? But we look at it from Nasdaq point of view. That's in our DNA. We started off in the 70s as the first electronic market when people were still trading voice broking and physical trading. And so these kind of things happen, and they happen because you move forward and you disrupt, and the adoption comes. But I think there is a widespread recognition across the financial markets and capital markets that tokenization is here to stay, and digital assets is an incredible opportunity. Working out the rules and the regulations and resilience around it is going to take time, but I think that will be driven by experimentation and also scaling those products. And I think organizations like yourself and ourselves, we know how to operate very safe, resilient markets for our customers. We've been doing this for years. This is another technology which we can apply all the DNA that we have, but really explore that opportunity to do that. So I think that that's where the adoption comes through.
Now, looking at the companies being listed at the Nasdaq venues, now when we talk about equities, so maybe rather the view into the US market, do you see by 2030 that most of them will be on the tokenized rails, or with the projects you have, be it through digital twin structures or natively? But do you believe that we can trade tokenized assets on those stocks listed on your exchanges by then?
By 2030?
Yeah.
Yeah, look, we don't. We think that over the next 3 to 5 years, you will see significant scaling of that. Now, who knows how much of it in each asset class will be on. But I think if you look at OTC, securities, fixed income, equities, and you look at funds, tokenized bank deposits, stable coins, I think a lot of that is accelerating. And I wouldn't put an exact time frame, but I would see over the next 3 to 5 years a significant proportion of those markets being traded, held, and also dealt with in a tokenized format. It may fully be in a hybrid state for 5 to 10 years, where you still do it the traditional way, or you can do it the tokenized way.
And it takes patience still going forward. Now, going a bit towards the end of our conversation, 2 last questions. One on rather what we are still lacking. So what do you believe do we really need to have the technology pull through and really that we benefit from all those efficiency gains that we have when on tokenized rails?
Yeah, so look, number one, we need a regulatory regime and also a ability to operate and scale and adopt the technology and the frameworks that we have that gives participants the same comfort as they do with traditional assets. And I think a lot of the work that we're doing with yourselves, Lydia, is really talking to central banks, the regulators, domestic regulators, European regulators about how we can do that in a safe and resilient fashion. It's not a matter of if, it's really a matter of how we do that. But we need the legislative and the regulatory frameworks to keep up with and allow that to expand. I think having artificial sandboxes with very limited caps is, as we've seen, is detrimental to actual scaling and actually adopting this in a widespread fashion. And then I think really what we need is also education and understanding amongst the investment community and institutional markets about what's the right way to tokenize, how do we get the benefits, how do we get interoperability, standardization, and how do we get the best or the least friction of those things happening around it. Now there is some legislation and domestic legislation that needs, and different European countries have accelerated that, especially in the concept of securities and digital securities and their validity and also their status, bankruptcy legislation and the ability to pledge or seize assets. I think it is still very jurisdiction based in Europe. So I think the legal and legislative framework also needs to be changed quite a bit.
Yeah. So as a last question, you have been pushing those digital asset topics within a large organization, and the listeners also working partly for a large organization that might be interested in also pursuing topics like that. Do you have any advice as a last point, and how, for institutional players, how can you push topics like that, which are very innovative and require a lot of stakeholder management? Like, what advice do you have? Like, how should they start, on what side of things?
Yeah, I think that's a very good question. I think number one is education and understanding the frameworks that are out there, and also what the FSAs and the regulators allow. So understanding what the EU DLT pilot regime, what MICA allows, and also reaching out, industry associations, educating themselves around what your peers and doing the research. I think there's quite a lot of body of work right now talking to us, yourselves or ourselves, about what they can do and what support that is there. But essentially, it is really understanding, what is allowable within your jurisdiction. So there is a legal compliance aspect to it, but then there's also the technology platform side of it, and also the business side of it. Okay, what business are you in, and where can digital assets and programmable assets be able to help unlock, reduce friction, lower costs, create efficiency, increase distribution, and also be able to customize and produce more product that you can deliver to the investor, or open up new markets, new investor bases like retail. So I think there's a business side to understand how digital assets can help you deliver on your business, either in terms of capital efficiency, operational efficiency, or new markets and new products. And then there's the legal and technology side, and it's really understanding that capability and really going out talking to the market and your peers about that.
Amazing. Thank you very much, Roland. That was very insightful. It's always a pleasure talking to you about those topics, and I'm very much looking forward to continue our alliance between Seturion and Nasdaq. So thank you very much for being here, and very much looking forward to continue working together with you.
Thank you very much, Lydia. It's been fantastic. No, it's been great to have this time to talk about it.
This was Inside Digital Assets, a joint project by BX Digital and Seturion. If you enjoyed this episode, subscribe to our podcast and feel free to share with others.